Hey guys, and welcome back to a new accumulation zone trade recap. Today we'll be recapping the price action that we saw today during the London kill zone, specifically the timing window between 2 a.m. until 5 a.m. New York local time. We're also gonna look basically what happened in between the London kill zone and the New York kill zone that's about to open up in less than 30 minutes. Alright guys, let's get started straight away. Okay guys, as usual, we're gonna be using the Scalping Pro indicator with the basic settings here at the top of our chart. There's a 10-day free trial, link in the description box below if you want to test the Scalping Pro indicator. We're also gonna be using the stochastic RSI with our settings of 3388 as usual. So let's make a little bit more space and just look at naked price action so far. So naked price action, just for a reference, this is our Asian kill zone. I'm just going to be drawing out those levels pretty quickly. Our Asia session high, once we open up here with this small gap here to the upside, would still be considered this wick of the 7:10 p.m. candle New York local time. And our Asia low would be considered this low right here that formed at 9:30 p.m. New York local time. So we're gonna be drawing out, as usual, every morning, those two levels. We could also look at the Asian kill zone high, so I'm gonna be drawing up this level as well, because there's a slight variance here. It's always important to watch for the starting into the new day, into the new trading day, because that's when a daily candle is closing, to monitor the levels of the Asian range when we are trading the London kill zone and the New York kill zone. So let's get into it a little bit more and get rid of the Session Pro indicator that we use to identify kill zones and also for the VWAP. So now we are in replay mode so that I can actually explain it candle by candle on what is happening on the chart. So we see right now it's 1:50, so we have 5 more minutes left until our London kill zone opening. And what do we see 5 minutes prior to the London opening? First of all, we see this we see that the Scalping Pro is about already broke out of the Scalping Pro bands basically, and is about to enter into that green zone. So we would be really curious to look at a reversal opportunity right from this level, since we already took out the Asian kill zone low. Why is it important? Because that's the level where it's very likely, we don't know it for sure, but it's very likely that the most stop losses for Asian traders that trade during the Asian kill zone or Asian session basically are very likely placed just below this low. We also see that the stochastic RSI is below the 20 level and is already crossing over. And we also see that we have news on the calendar, red news. We have the unemployment rate for the British pound and the claimant count change. I'm not really sure what this news is about, but I'm very certain that the unemployment rate is a high impact news event for the British pound. So make sure to check your news events with Forex Factory. And I'm also very excited because we're gonna be launching the accumulation zone traders calendar, the first trading calendar on the market to hang up on your wall very soon, so stay tuned for that. So we see that we broke the Asia low here, and let's continue with the next candle. So the next candle, if it's going to load, we see a impactful reaction based on this news event. The stochastic RSI is crossing over bullish. We had a sharp retracement back into our Scalping Pro band and actually above our average line, making this candle now a new green colored candle. The only problem, so this would be considered a valid entry on the Scalping Pro stochastic RSI strategy. The only real problem or issue that I have with this entry is that our stop loss, placing it below this low, is already larger than 25 pips, and I don't like taking trades during the London kill zone with a stop loss that's larger than 22.5, I'd say would be my maximum. So if you would have entered right here, maybe you could have went for a 23 point stop loss or just placing it right here on the Asian kill zone low. Still a little bit too big for me, because this basically needs, so this is 23.3 pips. So for our take profit target to be hit, we need a continuation of this London opening momentum right here for 46 pips. 2-to-1 risk to reward ratio, 46.7 pips. Of course, this can happen, but generally speaking, with backtesting results in line, we don't typically see a movement during the London kill zone, typically on a casual London kill zone of more than 60 or 50 pips most of the time. That's usually the range we are trading in, and it's really important for you to know that to really understand what you're trading. So now I actually still entered into this trade, but on the very next candle we see that we got a very deep retracement almost to the open of our 155 candle. So being a little bit more patient, waiting for a retracement into the super bullish candle could have played out very well, because now we're just looking at a 15 pip stop loss, bringing our overall take profit target just above our Asian highs, which would be very great, because in order to take out all those short positions or stop losses that are placed above this high are very likely to be tagged in here or with this move above the high. So waiting for a retracement, I actually had a member asking me that question, if I have any data about retracements, how far that next candle after our Scalper Pro stochastic RSI strategy pulls back generally, because this would allow us a way more attractive risk to reward ratio. I hope everyone understands the concept. So if we would have waited for one more candle, or just for this candle to form, we could have entered in a pullback, because our signal is already valid. Of course, you also run into the danger that the next candle could just be continuing further to the upside and you completely miss your entry. But on the other side of that risk that you potentially can miss out on a trade, there's also a high reward, because now you have a way more attractive stop loss placement and take profit target. With this deep retracement, we also see a nice and beautiful rejection wick here to the downside, meaning, or basically telling us or indicating us that there are still buyers in the market that want to keep pushing prices up higher. Alright, so let's continue with our modified retracement entry. Let's call it retracement entry. Our typical entry with the strategy would have been right around this level. So we see the next 5-minute candle is closing bullish. Let's wait for the next candle, and we see that we're still consolidating. We're still ranging within this most recent bearish candle right here at 205. So we continue playing the chart. Another inside bar, okay, with the next candle here at 225. 25 minutes into our London kill zone, we see a momentum continuation. If we wouldn't have seen that candle, I would have maybe closed a partial of the trade if we would, for example, now already be in drawdown, because this could have then very likely been a fake out to the upside for a continuation move further to the downside, going below our Asian kill zone low. But we didn't get it, so we can feel safe about our trade. The next target overall would be our Asian kill zone high right here at this level. So let's continue and see what we get. Alright, let's wait for the next candle. It's just taking its time, and we see we broke through our Asian kill zone high, and instantly sellers stepped into the market, taking the other side of the trade, basically pushing prices back right to where we opened, actually below where we opened. So we actually formed a bearish pin bar, or sort of a bearish pin bar. We see that the stochastic RSI is now above the 80 level, so caution is suggested. Alright, let's continue with the next candle. We're gonna go through this candle by candle to really make it clear. So we see continuation of the bullish momentum further into this high, but we did not yet get a close above our Asian kill zone high. So let's continue and wait for our next candle, and what we see now that with our smaller stop loss entry of only 15 pips, of course a little bit riskier, but also way more attractive with the risk to reward ratio and our smaller stop loss, because the smaller stop loss means that our take profit target is not that far away. So we hit our 30 pip take profit target, against the 15 pip stop loss target. And especially after seeing this wick, this could have been a very confident entry. But of course, before you use this live and risk actual live money with the retracement trick that I just shown you, backtest it. If you have TradingView Premium, you can use the new awesome buy and sell functions right here, where you can actually do a little bit of testing and gain some more confidence in pullback entries, because they obviously present a way more attractive risk to reward ratio. Because if we go back to our 2-to-1 risk to reward ratio with our initial entry, not counting in for the pullback, we're still pretty far away from our target. So now we actually broke through our Asia session high, not the kill zone high, the Asian session high, as soon as we open up into the new day, as soon as the new daily candle close. And let's continue. The stochastic RSI is about to cross over. We just broke out to the other side of the Scalper Pro bands basically. So we're just going to continue and see what the next few candles look like. Alright, so we see we get a momentum continuation, a nice rejection here from the upside, buyers step back into the market, but we see now all those wicks, and generally speaking I don't like wicks. We've got lots of dojis here, inverted hammers, forming a nice peak formation. We came back to the Asian session high, we bounced right away from it, but again up here we continued forming those big wicks to the upside. Again, we bounced off this level. That's why it's important to draw up your Asian levels when you trade the London kill zone and also for the New York kill zone. You want to see how the day sets up basically. And right now it looks like it's setting up bullish. We would have already hit our take profit target here. We can go to the left and we see that we had a peak right here that could maybe hold some resistance right around this level. And we see we did not close above this level. We only get big wicks to the upside compared to other wicks to the downside. Dojis don't count. Dojis usually signal indecision. Alright, so now we see the stochastic RSI is doing its thing below here. If you would have entered this trade right here with a 23 pip stop loss, I would have moved my stop loss to break even. And if you entered on this slight pullback, you already hit your take profit target, so you're good to go. I wouldn't enter based on this consolidation up here. Now what we could be doing is what I typically do. I use the fixed range volume profile. So right in here where you typically get your long and short positions from, you can look for the fixed range volume profile. And what I like to do with the fixed range volume profile, I like to look into basically what happened on this move right here to the upside, how volume has been basically presented itself. Actually, I made a little mistake here. I just want to see the momentum starting from this candle to our highest point so far, and we see most of the time the volume point of control, this red line here, will actually be right where we had the longest consolidation, longest sideways movement. We had 1, 2, 3, 4 inside candles of this 2 a.m. opening candle with this sharp reversal to the upside, consolidating inside this 2 a.m. candle until we got the continuation movement further to the upside. And we see that the volume during this momentum up move here, right here, was smaller than the volume, so the orders that have been put into the market to this compared to this consolidation. So we have a area of potential support right here at the volume point of control. So I'm going to be drawing a rectangle around those inside bars, because that's very likely when the big positions have been put into the market, and those bigger players, they are active traders. They actually protect their positions with new positions. So if price is coming back to this level, we could be looking forward for maybe a reversal pattern like a double bottom, or maybe we have a look at what the Scalper Pro is doing for a potential pullback continuation move to the upside. So basically this is the pattern that we would be looking forward to. So we broke above our Asian highs, we consolidated a little bit, we pull back to our volume point of control, to our volume area high during those 4 inside bars for the continuation move to the upside. The typical, maybe not typical, the typical A, B or 0, A, B, C pattern. A breakout, pullback, continuation of the move. This setup is the easiest setup to trade. Alright, so let's continue and see how price reacted after the London session basically closed. I wouldn't have taken any trades around this level. We see that the Asian high is still holding some valid support. Alright, let's continue. Let's skip this forward very quickly. We see we don't want to get inside of this trade during this ugly consolidation. Again, we're holding support now on the Asian kill zone high. Those are not random drawn lines, they're actually important levels. We had a beautiful wick to the upside that has been instantly sold back, so buyers wanted to push price up higher, but sellers stepped into the market pushing the price back down, leaving behind this wick, and this actually tells us a story. So let's continue. So we see buyers again try to hop into the market and push prices back up higher, but the sellers had the upper hand and we pulled back below our Asian kill zone high into right to our volume point of control during those 4 inside bars. Let me draw it out. That's the volume point of control for this movement to the upside. Of course, if you would use the whole range, the volume point of control would be up here because that's a even longer consolidation compared to this one. But for our ABC pattern to work, breakout, pullback, continuation, we have to look for an area that's on our way, an area of support on our way during this breakout, during this initial breakout move to the upside. So we only look at the volume and how the volume has been distributed during this period. So now we see we hit the volume point of control. Let me quickly change that color here. We're gonna make this red and we're gonna call it volume point of control, VPOC. We're now inside of our volume area high, right here, inside of all our inside candles based on this 2 AM candle. And let's see how price actually reacts to this volume point of control. So we see every time when we go below it, buyers keep pushing prices up higher, leaving behind those wicks. There are almost no wicks to the upside, only wicks to the downside currently, giving you a small indication of what potentially could happen. Of course, entering based on this, you can, for example, use a Fibonacci retracement tool to measure how deeply we have retraced into our initial breakout move to the upside. Right here, we're looking at roughly 60% retracement. We got close to the 70% retracement level. Generally speaking, an entry below the 50% level is ideal. We could also put on the golden ratio, which would be the 61.8, 0618. That's a golden ratio. And we hit it perfectly. We held support on it and it also lined up with the volume point of control. So that's actually how you can combine confluences. That's so important for you to learn. How to, for example, trade the ABC pattern in confluence with the Scalper Pro. The stochastic RSI, for example, also just crossed over bullish. And now putting all those little pieces of the puzzle together could form your idea. So let's continue. So we see the Scalper Pro is still bearish right here on this candle. This doesn't mean that you cannot take an entry. This is just a helping tool if you're scalping the lower time frames, looking for reversals, breakouts, squeezes, like for example here with this yellow background. So let's continue clicking through this chart. Our overall take profit target, if we would have taken the entry up here and we did not wait for a possible retracement, would still be right up here. Let me draw this up to risk to reward. So we see we already hit a 1 to 1.5 risk to reward ratio with this consolidation up high. So we would have moved our stop loss to break even to protect our position. But knowing that we have the volume point of control here, we have the 61.8 retracement level here, and generally speaking, the Scalper Pro stochastic RSI strategy is a breakout pullback continuation strategy. We could have actually left our stop loss down here, or maybe tighten it up a little bit, saying for example, hey, if it's going below this wick or maybe below, let's go for a 12.5 pip stop loss, or even a 10 pip stop loss, we're still below our volume point of control. Of course, now we run into the danger that a small little wick could take us out and basically mean that we lose money. But depending on how you actually manage your risk, that's what we are risk managers, you can easily navigate this trade based on a simple breakout pullback continuation setup. So let's see how we continued. Price continued rallying to the upside. We would have hit our initial take profit target from our London kill zone opening candle, continued further up higher, and for a rough measurement of how high the price can possibly go or reach for, is we basically use the low of our range right here, of our breakout. We're going to use the higher, and then we're going to use the -1 standard deviation of this range for a potential profit target, basically meaning that the area that we formed right here, that we broke out of, will be used again right up here, and it's basically 1-to-1 the same price distance measured in pips. Alright, so let me get rid of this red box here, and also of our initial trade. We all now know how it played out, and let's see where we are currently sitting at. So we see price again made a move to the upside. We can measure it using the Fibonacci retracement or extension tool. So let's say, for example, we want to see if we already extended our range from the bottom here. We extended it to the half of it. We went a little bit above half of the size of this box down here below. So if you look at this price action here as a box, basically, you see that half of the box has already been put to the upside. So now we're getting a retracement. We could again use the same Fibonacci tool, but this time from our most recent swing low, swing high, and we could be looking for another similar entry, maybe below our 50% level, because now if we use the volume point of control over the whole range, basically over this whole move to the upside, we see that the volume point of control is just around that level, just around this major consolidation. And that's how you can trade trends with certainty, looking for pullbacks as an entry continuation into the trend. I hope this trade recap explained a few things to you. Maybe you learned something new. That would be really great. And yeah, if you like the style of those trade recaps and you want to see more of those trade recaps, really going in depth of why price moved, how it actually moved, please subscribe to my YouTube channel and like this video, so that I know that I should be putting out more content like this. Maybe also leave a little comment in the description box below, or the comment section below. And yeah, I'd say that's it for me today for the trade recap on the British pound US dollar. We will see how we go into this New York kill zone. We see that we have 5 minutes left before the open. Yesterday was a New York bank holiday, or an US bank holiday, so I'm expecting lots of volatility. We also got a nice beautiful reversal signal right up here inside of our reversal band for a pullback. Of course, if it's going to be a reversal that is basically breaking our Asian London lows now, is the question. It depends if you are a reversal trader or a trend trader, and you should really ask yourself that question, what can you do best? Am I a good trend trader, or am I a good reversal trader? Alright guys, take care. I will see you in the next trade recap. And of course, if you have any questions, feel free to join us on Telegram or Discord and just ask me the questions personally. I will be doing my best job at answering it. Alright guys, take care and trade safe.